the same.
I'm trying to remember to always have a good little song to come into these guys. So sorry everybody, I'm a little bit late today coming on. And of course Pink Floyd's Money is always a good one when I'm talking with Chris Wilson. So I will put that on pause for now. Hi everybody, it's Linda Schulte with Schulte Realty. I'm the broker owner of the company here in the Central Florida area. And as you guys know, I come on Thursdays around 1 o'clock, sometimes a little bit later. Like today. And we talk about everything about home buying, home selling, home maintenance. We also do a lot of conversations with local charities, the people that are here locally and maybe are not as well known, but they really get a lot of things done in the community for everybody out there. So I just always like to invite you, if you are a vendor out there, whether you're home insurance or if you're a home inspector, mold remediation, contractors, plumbers, or you own or work with a charity, reach out to me and let me know, and I'd be happy to talk to you about possibly coming on and being on here with us. So please invite some folks on, because I'm here with Christine Wilson from the mortgage firm. She's for Team Wilson. They rock. And we're going to be talking about a couple of things, but one of the main things is there's actually 6 myths to mortgages. There's 6 mortgage myths. So we're going to cover 1, 2, possibly 3, but we only have 20 minutes.
Okay.
So I'm going to keep an eye on us because we end up talking a lot. So, well, without further ado, let me go ahead and let Christine introduce herself and tell us who she is and what she does. Hey, Jay, how are you? Jay, you need to talk to her. All right, Christine, tell us who you are and what do you do?
My name is Christine Wilson. I've been with the mortgage firm and in mortgage lending for 14 years. Actually, last week was my 14th anniversary.
Congratulations.
So, what do? We help people realize the dream of home ownership, truly, and we enjoy it. We love our jobs, and I work with a team. I have a team of 3 other ladies that are wonderful and help me do a lot more than I could do all by myself, for sure.
And real quick, I just wanted to congratulate you because you guys just opened up your own branch, and that one I'm seeing right there is awesome, by the way. So let's go ahead and talk about that one.
So mortgage myth number 1, you must put 20% down in order to purchase a home. And that is absolutely not true. Interest rates are so amazing right now. Even if you had 20%, it would be hard pressed to put down the 20%. And mortgage insurance rates are really, really low right now because for the last 5 years, we've had really great lending out there, so there's not a lot of loans that have gone into default. So mortgage insurance rates are really competitive as well. So on conventional loans, you could go down as low as 3%. For you, one program you have to be a first-time home buyer for 3% down. And then the other program, which I love this program, is called the Home Ready, Home Possible Loan. You don't have to be a first-time home buyer loan to do this loan, but it's income restrictive. So your income has to fall within a certain period of time. But we just did it on one lady. I looked it up, and there was no income limits at all. And she was putting like 15% down, and we were able to get her lower mortgage insurance and a lower interest rate with that program.
Nice.
So,
and that was with how much down?
Well, you can go as little as 3% down on those programs. Your income, and you can Google them. There's a map on there. You just put your address of the home that you're buying in, or even a home that's near where you're buying, and it'll tell you the income limit on that area. Okay,
so it's specific to where the home is at that you're buying. So if you guys need that information, you can always reach out to me. There's my number, and you can always get Chris's information. We'll give Chris's information towards the end, and we'll also post it on here as well. So myth number 1 is, I get this all the time when they say they want to rent a place. I'm like, why don't you buy? I'm like, well, I don't have 20% to put down.
Yeah.
And then when I tell them, you could probably do it as little as 3%.
Yeah.
They're like, are you kidding me? Yeah. So they're shocked. So don't.
And vets are, if you're a veteran, you have 100%. I mean, most veterans know when they're eligible, they have the 100%. and no mortgage insurance, and the rates are awesome on the VA loans. And FHA is 3.5% down, and you can get gifts for all of those loans. You can get gifts on. So if you have a gift from a family member, then those are every one of those loans, you can get all of it gifted, all the down payment and the closing costs gifted.
So I guess the point to take away is that if you don't think it's possible, give me a call, give Christine a call. We can make the impossible happen.
Yeah, and you know what? I'm a big fan of showing people the way and not the door. You know, sometimes, you know, some people are just scared to call me because they know I'm going to financially undress them, number one, and number two, they're afraid of me saying no. And sometimes that is the answer, but the answer is usually no, not right now. But this is what we need to do to get in a position to buy. And so we do that a lot.
You know, and that's real important too. What she just said, it's to give a call, because if you're wanting to buy a house in 6 months to a year, talk to the mortgage person, because they might spot something that you need to tweak a little bit, and it can change you from being a 600 to a 700 in 6 months.
For sure.
You know, it might be an error that you did not know about. Did we want to talk about credit karma, or is that one of your myths?
I don't know. Let's see. What's myth number 2?
Let's
you must be without debt in order to purchase a home. This one's good too, because I get this one a lot too, and they're like, well, I just thought I had to pay off all my credit cards. No! Keep your cash, because you don't want to lose a house over $2,000 because you paid it on a credit card versus paying it on a down payment on a house. So, I mean, I'm not a big fan of credit card debt. I don't love it, but on the same token, you don't want to lose out on your dream house and start investing in your future in a home just because you paid off a $2,000 credit card instead of putting it down for down payment.
There again is the reason why, before you do anything, because everybody thinks they're a credit expert, because like when Credit Karma, and then their brother, sister's mother's father told you that you should do this. I have so many times stopped people before they've done something like pay off a credit card and then gone to cancel it. Like, no.
Yeah, or cancel the credit card. That's another one. People, I closed out all my credit cards. And so then the credit plummets, you know, by 40 points. And so. Yeah,
there's a lot to the credit game that you maybe think is like, it sounds like the right thing to do, but maybe in the whole world of getting a mortgage is not. That's why it's really imperative that you reach out to Christine Wilson about that and talk about what's going on, and being very honest and in detail, because if you know, as far as me, if I don't know, I cannot help, and it goes the same thing for your mortgage person. So
I would think on, like, for ratios, when people ask me this question all the time, well, where am I debt to, for a good rule of thumb, we use gross income. Lending uses gross income. We don't use net, like what you take home. We're going to use, if you make a $60,000 salary, we're going to use $5,000 for your income a month. And then with the new payment on the house and all the other debts on the credit report that come up, or any other outside payments, like if you have to make a tax lien payment or a child support payment or alimony or something like that, all those payments, monthly debts that you're about 50%. All your debts and the payment on the new home can't be more than about 50% of your gross income. Okay. Now that's just general. I mean, FHA will go up to 56 debt to income ratio. Conventional is going to be right around 50. VA can go up. It can be a little bit more flexible. But 50 is a good general guideline if you just want to do kind of a little bit of homework yourself.
Okay. Yeah, it's a good point, is to see what you make throughout the whole year, what your annual income is, and then check what all your bills are, and make sure it's 50% or lower.
Yes.
So of all your living expenses. So I know there's 6 of them here. We have. I do want to touch on that Credit Karma thing too, just before we're done. So, so we got myth number 3.
Yep.
Oh, okay. So hey, it goes to Credit Karma. Hey, is that karma or what?
Mortgage myth number 3, this is why we're laughing, is that you need to have excellent credit in order to buy a home. So yeah, this is okay, so let's talk about Credit Karma versus, I said this to a real estate agent, I said, you know, Credit Karma to lending is like Zillow is to you guys. Yeah. It's like, if I have to hear Credit Karma one more time. Yeah. It's awesome for you to monitor your credit. It is. It's fantastic, but it is not your mortgage credit score. It is not. They weight things way differently. They weight things evenly. They give the same amount of, you know, and sometimes even the collections aren't even calculated into Credit Karma's credit score. And so when I pull it and and they have collections or something like that, then the scores with Credit Karma could be like 700. But then when you add in the collections, if there's like a medical collection from a couple of years ago or something like that, then the score is like 650. So when we pull, and that's why there's a big difference. So our credit reports are good for 4 months from the day we pull it, so we don't have to pull it again. You know, a lot of people think we're always pulling credit throughout that whole period of time, but we're not. But no, you don't have to have excellent credit to buy a home. We can technically go down to 580. So that's FHA, VA, those two. Lending in general prefer like a 620 or more on a, so 620 or better is definitely workable, and obviously the higher the credit score, the better the interest rate's going to be.
Right, yeah, that's true. So just to recap, Credit Karma is not the best thing out there for you, but good to monitor you.
Great to monitor your credit to make sure that you see what's going on, and then also to but it's not your mortgage credit score. I would just say that when mortgage lenders pull credit, it's a very specific type of credit, and it's mortgage credit, and it's going to be different than what you're seeing on Credit Karma.
Yeah, and that's I think I get phone calls from some people, and I'm like, I have a really great credit score. Where'd you find it? And they're like, on Credit Karma. I'm like, oh. And then I'm not, obviously I buy and sell houses. She does mortgages. It's like, you need to just call Chris Wilson. She'll explain that to you. Because I do hear that it's a little bit more inflated, but people don't get that. Those commercials on Karma Credit is just amazing, and people fall for it, just like a lot of other advertising. And there's Jamie Hoover. Hi, Jamie, how are you? That's from Lender Insurance. So let's see here. I know you have 6 of them, but you gave us 3. Okay. You
want a 4th one, or you want or how's our time?
We got plenty of time, but there's always other things to talk about. So so listen, there are 6 myths, and they're all very, very important. Some of them might need a little bit more detail than we're able to do today. But what I would like for you to do is to please shoot me a message, text message, email me. Let me get you in touch with Chris Wilson and her team. On the Facebook page, they're always posting these items on there, so it'd be a good idea to follow them. Do you have your Facebook page by any chance, or we'll post it later?
Yeah, we'll post it later.
Okay, so it's a good idea to follow on there because there's some great stuff on there. And if you're wondering what they are and you want to have a one-on-one conversation, give them a shout. What's your phone number?
321-972-9421. And I would say this. Just call us. We are really great at explaining what's going on, and also putting a plan together. You know, we're not just like, nope, see ya, bye, which a lot of banks are. You know, a lot of banks, when you're going to call up, if you're going to call up a mortgage lender at a bank, they might just be there just to order take. You know, take the order, and then nope, yes, and they can't go over credit. I know that, and so we're not. I always go over the credit report with people, every detail of the credit report, so that they know, because there's been times when they're a junior or a senior, you know, and they have their dad's or their son's information on their credit report, and so we make sure that we go through it with them every single time.
And that's important. It's not all lenders are made the same. Not all banks are made the same. That's something you want to watch out for. So you're partnering up with this. You want to have the extra service that's there. And it's well worth it in the long run to make sure that they're coaching you through to get the best rate, and not just an order taker. And they're there as a partner, and they're just like me as a realtor. I'm there for life. They're going to be there for life with you as well.
It's not a job.
Yeah. I'm not in it for a minute, as I always say.
Well, and my dad and I were just talking about this, Linda. It's funny we're having this conversation, but so my dad had got a new doctor, and he said, "Oh my gosh, he's just so amazing. I can't believe he didn't catch my other doctor didn't catch this." And I said, well, Dad, just because they're a doctor doesn't mean they're the best doctor for you. You know, just because they have their degree and because they have a license to practice medicine does not mean that they're the best one for you. And you just found the best one for you.
Right.
And now he's doing so much better and everything else. So it's the same thing in our profession. Just because you have your real estate license and just because you have your mortgage lender's license, it doesn't mean that that is the person that's going to give you the best advice, right?
That's a true statement. So always shop around when you're looking for a realtor, looking for a lender. Ask people about, what was their experience. Also, make sure you're asking for personal experience, not just because your brother's cousin's sister just got the real estate license or just became a mortgage lender. I listen. I had to start out somewhere too, and I get it.
Yeah.
But if you're going to be choosing somebody who's like brand new in the business, you want to make sure that they're being mentored by somebody who's going to be right there with them.
Yeah, because unfortunately, in our line of work, every lesson is learned by experience.
Yeah.
And by lessons. I mean, we have to learn our lessons the hard way.
Yep.
And so it's all, nothing's written in a book for us.
Yeah, it's not. And
very
it's
difficult.
It is all about experience, and no matter how much classes we go to.
Yeah.
So let's real quick. We're gonna hop over to something that's near and dear to my heart. Is the pre-approval letter. So I got a phone call, and most of my business is all referral only. So people that already know me and heard of me. Every once in a while, I get a phone call from somebody that found me on Realtor.com or something like that. And they say, hey, I want to go look at your house you have listed. Great, happy to help you. One, I always ask, do you have a realtor? If they don't, I'm happy to help you. And my next question is always, what bank are you working with? Are you buying with cash? Have you have a pre-approval? I just cringe when I hear when we find the right house, we'll go ahead and talk to a lender. I am not willing to really go and show people houses for that. When they say I don't have a pre-approval, they haven't even picked up the phone and called somebody. Tell us what's the importance and why should a pre-approval letter be done?
Okay, so first of all, a lot of people try to go online and try to do their own payments online, which is always, and so really number one for the whoever buying the house, the buyer, they need to have accurate information of what their payment's going to be and what their funds to close are going to be. I call that my payment funds to close talk, because I make sure that everybody knows what their payment is and funds to close, because if you don't know those two things and you're not for sure about them, or you're and you're just kind of willy-nilly it on the internet, it is there's going to be a surprise. There's going to be something that happens, and then you work super hard. Time is money. You work hard to get a contract accepted. You work hard to go out. I mean, even for the buyer, their time is valuable too. That they go out and do all this, and then when I get the contract in, and if they haven't talked to a lender, and I tell them what their payment is, they're like, and then we have, and then now you've taken up time from the seller, and taking their house off the market. So pre-approval. So let's kind of one step back. When you call a lender, you give their preliminary information, you pull credit, and you give verbal information over the phone. That's a pre-qualification. You're being pre-qualified over the phone. But we haven't verified any of that information. So then once we will send out a list of all the documents we need, pay stubs. Sometimes we can verify that stuff online now. That's really cool that we've been able to do a little bit more electronically now. But we'll ask for pay stubs, tax returns, W-2s, the bank statements to show that there's money in there, in their bank account. And so many times people will, sometimes people will tell me that they have 10 grand in their bank account. Well, then I get it, and they had 5 grand in their bank account. And I say, what's going on? Why is there, you told me there's 10 grand. Like verbally on my screen it said 10 grand, but when I get the documentation they had $5,000 in the bank. And I say, well, what's going on? Oh, well, I'm going to get this bonus in 3 months from now, and blah, 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 or I'm going to get a gift, which is completely acceptable, but we need to know that kind of information. And so, or where's the gift coming from? Oh, it's coming from my cousin over, and no, because everyone's got a cousin. So, no, we can't use those funds, if we can't show a relationship between the two. No, we cannot use, the $5,000 is in my safe. That's a good one. So, I have $5,000 in my safe at home or under the mattress. We call mattress money. Or servers, bartenders, they're kind of famous for this too. People who work with cash, they'll save cash in their, oh, I got $5,000 cash. Well, cash, nope. You can buy a house with 100% cash, but you cannot buy a house with cash in your bank with lending. So, so making sure that we're verifying. So if they went and did a offer on a house with bringing 10 grand to closing, but 5 of that grand we can't use because it's cash in the bank, then they're 2 months out. They got to put the money in their bank. They got to let it season in their bank account for 2 months or maybe 1 month. We might be able to get away with, but they got to put it in their bank account. So it's not always as easy as. Like you said before earlier, sometimes people think in their head they know it's right. Now, like a server and a bartender, them saving up money for over the last 4 years and they got 5 grand, it's totally acceptable on their side. But they just don't know that we have to have it in the bank.
Right. No, it's important, and that's why talking to a lender, 30, not 30, I'm not 60. I'm talking 90 days. Oh yeah, I want to say hello to Andrea Ketchum too. She said hello to us earlier. But if you're 90 days, six months, a year, that's still a good time to go and reach out and start talking with your lender, because they're going to tell you what you should be doing and how you need to do it to be poised to be in the right position.
Yeah.
When you find that right home, that's why you want to have that pre-approval letter. Yeah. Because once Christine says, I got a pre-approval letter, you get somebody like me, I'm ready to rock and roll, and that buyer's ready to go. I'm on it, and lightning speed, getting especially to make sure we get
a ticket to go.
Yeah, it's a ticket to go, and it's and I was just talking to somebody today. They had a pre-approval from another national online service, and they're in a very tight price. They're under 200, and so I said, I'm glad you're pre-approved with them, but I have to tell you, a lot of listing agents are looking for a local lender. A lot do. If you're competing against, Christine Wilson versus some other large company that we don't have almost like a concierge level help here locally, you could actually lose out on it. In fact, I know that for a fact, I've had my some of my offers accepted because they knew who the lender was. Yeah. So it does make a difference in who your lender is.
They're accountable. I mean, if you can walk into my office and hold me accountable, I mean, we have it's a different type of relationship. It's a different relationship out there that we can. My service is to the real estate agents and the buyer, because we're going to be forever together. An online lender just is a transaction out. They're doing that one deal and it's done. And they're not looking to build a relationship and to have future business out of it. Yep. It's a one and done type of situation.
And I'm not saying that they don't necessarily check the documents for income. But a lot of times you do get I verified it, or how did you verify it? And if they're not digging deep into the questions of, you said you had 10,000, but now I'm looking now, we're at the closing table a week before. It's like, wait a minute, you only have 5,000 in there. It's like, how did you not spot this in advance? So I'm not saying that they don't do this. I just know, again, what the local lenders do here, someone like a Christine Wilson and her team. So those are important things. So it's a good thing to, one, find your right realtor.
Yes.
That's like Shelton does. Is that how he does it?
Yes.
And also make sure you got the right lender. And remember too that they're all going to be partnering together with you as the buyer to make sure things do happen for you. So. Well, listen, we're about 20 minutes, maybe 25 out after.
Wait. We have to all wish Linda happy birthday. She's got a birthday coming up Saturday. Is Saturday your actual birthday?
Yeah, Saturday's my actual birthday. Yeah, I was one day away from being Patricia, being Irish Catholic and all that. My one day later, my mom
Sunday, 17th. Oh, yeah.
Yeah, St. Patrick's Day. Yeah, and so. A kid that went to St. Patrick's grade school in St. Patrick's Church. My mom's like, you totally were going to be a Patricia. No offense to any Patricias out there. So I'm glad my dad won out and got to name me Linda.
Well, everybody wish Linda happy birthday.
Thank you. I'm going to be 21, be my first drink on Sunday. Not. So, again, thank you so much for being on here. We'll be back next week on the 21st. And we're going to have Jackie Berkson, a positive this time that I'm going to have her. Last week I kept on saying that's who I was going to have this week. She's with LRA Insurance. We're going to be talking about flood insurance. It's it's important stuff. Just because your lender doesn't mean that needs say you have to have flood insurance. Folks, we live in the state of Florida. Yep. You're going to want to have a conversation here. What could happen if you don't have it? I know plenty of people that are not required by the carrier, or by the lender to have flood insurance, and they've had some issues and some concerns with that. So, and that's Lacey. Oh, hey, Lacey. That's, hey, she's awesome. She's a really good buyer's agent out there. So, you need to send me some more deals there, Lacey. All right, well, listen, it's been fun having you on as usual. We could talk for like 2 hours here. Remember to give them a shout to find out what the other myths are. You want to get onto their Facebook